What's up, guys? We are back with another video. This should be day 6 or 7. I don't even remember at this point. All I know is that we're recording for 365 days in a row. We're posting for 365 days in a row, whatever it takes. But this is day 6 or 7, and I'm going to be going over the 10 main reasons why traders fail in the markets. And this is very important because I want you guys to definitely watch this video fully and learn all these concepts for sure, because this is why so many or 99% of traders fail, and it's for these 10 reasons right here. If you can avoid these 10 and you can do better at these 10 points right here, I will already guarantee you that you will most likely be a profitable trader in a matter of months or maybe even, a year. And so, number one, over leveraging. You don't want to leverage more than you have. That's for sure, unless you're trying to flip accounts. But when you're at that stage, I'm going to assume that you're already a profitable trader. And so, you know what you're doing most likely. But number one is over leveraging. You don't want to over leverage more than you have. If you have a 100K account, you don't want to be leveraging that much. You want to be risking, 1% max. And so that's why I always recommend using the risk position size calculator to, to calculate your risk and everything like that. And it leads to not over leveraging, and it leads to you entering a trade with proper leverage, proper risk management, and everything like that. So you don't want to over leverage. That's number one. Stay away from that. Unless you're flipping accounts. But if you're watching this video, most likely you're not an experienced trader, and so you definitely don't need to be over leveraging for sure, because this is more for if you're already experienced in the markets and you know what to do. And number two is lack of risk management. A lot of people don't risk. I mean, a lot of people don't manage their risk, and that's very, very bad. Because, like I said, if you're a beginner trader, you should be risking very, very little amount of your account. Whether it be 1%, it can be even lower, 0.5%, which is what I recommend for new traders, or you can even go as low as 0.1%. You're still a beginner in the markets. You shouldn't be trying to rush and make this this large amount of money in such a short, time frame. So number two is risk management. You definitely always want to be risking 0.5%, even less if you're a beginner trader. This is very, very important. I'm gonna mark this, very important. This is super important. You guys have to do this. Recommend using position size calculator. Always use a position size calculator. If you guys don't use this when you enter a trade, you're not gonna be profitable. I'm gonna tell you right now, there is no profitable trader that I know that doesn't use a position size calculator. This is so important. Just literally bookmark this, favorite this on your web. Use a position size calculator before entering trades. Third, chasing trades is very, very bad. And why is that bad? Because you could have lost a trade and you're like, oh my gosh, I was wrong, but now it's going this direction. So let me just enter this trade because it's going this direction. That's horrible, guys. Like, why are you guys chasing a trade that you didn't do any analysis about beforehand at all? That doesn't make sense. It's like, I don't know how to explain it, but you don't want to chase trades because at the end of the day, you're trying to take higher probability setups. And so if you're chasing trades, most likely you didn't have an analysis beforehand. You weren't prepared to take this trade. You're chasing it. You weren't prepared for it. And so chasing trades is very bad because it could lead to blowing accounts. It could lead to losing a lot of money. It could go well, but the 10% of that happening is very rare. And at the end of the day, we're trying to be profitable. And to be profitable, you have to be consistent. And chasing trades is not going to lead to consistency whatsoever. By being consistent, you guys have to understand that you guys only want to enter on these higher probability trades. You guys only take trades based off of your analysis and what you think and what you believe is going to happen. And so you never want to chase trades. This is a big no-no. X. Never do that. Never do that. Fourth is emotional trading. Emotional trading is bad because, like I said, I haven't said this to you guys yet, but there was a research done at a university that, a human can only make 2 to 3 financial decisions a day. And so when you're trading the financial markets and you took already 1 or 2 trades a day, that's plenty. You guys don't want to be taking too many trades a day. That kind of goes hand in hand with 4, 5, and 7, because at the end of the day, even if you guys lose a trade, you guys, instead of just chasing that trade, going back to it, chasing your loss, trying to make that money back because you guys lost X amount today, that's a horrible way to think, because you guys want to use those losses as a learning lesson. Every single time you guys lose in the markets, take that as like a slap in the hand. You lost X amount of money, whether it be 500. Let's just use 500 for example. You guys lost $500 that day. Now, understand you guys lost 500 that day, and if you guys start chasing that trade, you guys are now emotional as well because you guys lost a trade. Your mindset's not in the right place. If you do take another trade, you don't have a clear mind. You're chasing to get that loss back. You're down 500, you want that 500 back to break even, or you're trying to make profits that day. That's a horrible idea because at 99% of the time you're just going to lose more money. Instead, take it as a lesson. Instead, it cost me $500. That lesson cost me $500, but it was a very valuable lesson. If you guys don't want to lose $500 again, you guys would go back, see what happened to that trade, and see why did the markets shift, and why did it not go in the direction that I wanted it to, and why did it not hit my TPs? Why did it hit my stop loss instead? Now that you lost $500, use that as a learning lesson and be like, okay, damn, that lesson cost me $500. That's the way you should be thinking. You don't want to re-enter the trades and chase to make that money back, because most of the time, 9 out of 10 times, it's not going to happen. You're not going to make that money back whatsoever. Just trust me. If you don't trust me, give it a shot. Try chasing your losses. Try chasing your trades and see what happens. Maybe you prove me wrong. Come back and send me a screenshot and let me see, because I'll be very happy to see someone actually managing to pull that off and chasing their losses and consistently being profitable with that. That is very, very rare. And if you can pull that off, kudos to you. That's just not for me, and that's not something I want to teach to people for sure. You don't want to chase losses. You don't want to overtrade. You don't want to trade when you're emotional. Those three things go hand in hand. And so, keep those three together and think about that when you're taking trades, especially when you lose trades. You guys take that as a lesson instead. Another thing is a lack of education and strategy. If you don't have a edge over the market, or you don't have a strategy, what I recommend is just opening up a demo account. A demo account is just on MetaTrader 4 or 5 it's just a fake account with simulated funds that you guys will be trading. It will trade exactly like the real markets. The only thing is that it's not real money. It will move like real money. It'll show profits, it'll show losses like real money, but you can't withdraw it. It's fake money. It's just to practice. And so if you don't have enough education in this space, you don't have enough knowledge in this space, you don't have an edge and a strategy over the market, just start trade on demo accounts and create one for yourself. And there's a lot of traders out there that have strategies that you guys can just copy, and you guys can kind of just refine into your own style of trading, because at the end of the day, the markets is been out for what, so many years now, dozens of years, that all the strategies have been developed and created. You guys can't create your own new strategy. It's just not going to work out. You guys are going to spend years to do that. Instead, find a profitable trader, copy their strategy, and refine it to your own liking, and then use that to trade. And so back test that, keep trading on that for a couple months, and keep that in your trading journal. Was another thing that I was going to say for number 10 is keeping track of your trades. Every single trade you take, for the beginning of your journey to your end, you never stop keeping track of your trades. This is very important because you guys want to go back and take notes on those trades. Every single time you take a trade, you want to determine why you want to put in the notes why you took this trade, what was the reason for it. If you failed and it hit your stop loss, you want to go back and learn about it. You want to see, why did this trade go the wrong direction? What could I have done better to improve, and how could I have entered better and gotten a better position? All those things come into play when you're trading, and especially when you're keeping track of your trades, it really helps, because as you go on with your trading journey, you guys can go back and kind of differentiate what kind of trades and what kind of strategy worked and which ones didn't. You guys can definitely tell by just keeping track of all your trades which strategy worked and which strategy didn't. The profitability rate, how the success rate on your trades, the loss rate on the trades. So keeping track of your trades is definitely very, very important, because it's just like keeping track of your funds in your bank. If you have a bank, everyone has a bank. You always open it every single day to see the bills that got taken out. You want to see the money that comes in. And so it's just same as trading. Treat your financial trading account just like your bank. You keep track of your trades, keep track of your investments, keep track of your expenses. So that's super, super important. And last but not least, even though it says number 9, is neglecting fundamental analysis. You don't want to completely avoid it. always keep in mind that news and reports that come out will impact the price movement of the markets. And so what I always recommend to people is just, don't just completely forget about it, but always go to forexfactory.com for sure to check the news coming out, check all of the red folders coming out, and just so you don't enter a trade maybe when high impact news is coming out, or maybe you can take a trade based off of that high impact news. And so just completely avoiding fundamental analysis is a horrible idea, because you can just have no idea. You can be in a trade and a red folder news comes out, CPI, whatever it be, and you can just blow your account just like that. You get liquidated and you're like, why did that happen? But all of the entire time it was just the news. And so you never want to neglect fundamental analysis. Even if you don't trade it, always keep it in mind and always have it in the back of your head, because anything could happen if news come out. So always check forexfactory.com. Yeah, that's about it, guys. Not too much to go over. It's pretty simple. All these things are fairly simple to prevent, but the thing is, these 10 things are the reason 99% of traders fail. And so if it looks easy for you guys, just keep practicing all these things, and I promise you, in whether it be months or years, you guys will eventually be a profitable trader if you guys keep this up and you guys don't fall into this trap and do these 10 things. I appreciate you guys for watching the video. If you guys have any questions, just leave it in the comments. I'll be there to answer them. I'm gonna make another video tomorrow. I don't know about what yet, but hope you guys are ready for that, and peace out.